Welcome to another video. In today's video we will discuss the company Viatris. First of all, I want to say that I appreciate everyone watching. If you like the video, please consider subscribing and liking the video. It would really help me out in growing the channel. Thank you. The portfolio is recovering a little bit and I bought a bunch of fractionals to compete in the giveaway of Book Zero. If you want more information about that, you can check out my short video. Overall, I still see a lot of buying opportunities in front of me, and Viatris is one of them. Viatris is an American global healthcare company. It was formed through a merger of Mylan and Upjohn and got spun off from Pfizer. Viatris stands for three paths in Latin. Together with its logo, it captures the company commitment for healthcare access, leadership, and partnership. First thing to notice is that spin-offs tend to beat the market. A study revealed that spin-off shares achieved an excess return of more than 10% per year above the US stock market return over 36 years. A spin-off is a dividend distribution in terms of shares of the new company to shareholders of the parent company. One of the primary reasons for undervaluation of spin-offs is because the shareholders of the parent company are not interested and sell the shares of the new company immediately. Some institutional investors are also obligated to sell shares of the new company. Since they might have a large cap fund, they can't hold mid cap or small cap stocks and need to sell out as soon as possible. So, since the spin-off of Viatris, we can see a clear sell-off. Viatris went down 35% from all-time highs and still needs to recover more than 30% to reach all-time high again. By only knowing this so far, the company looks interesting for sure. Of course, not all spin-offs outperform the market, but if we can find the right one, we can profit a lot in the long term. Last quarter, Viatris had another great performance and raising full year 2021 guidance again after a raise in last quarter. Next to this, Viatris is trying to pay down debt as soon as possible. Year to date, Viatris repaid $1.9 billion in debt while remaining on track to repay $6.5 billion by 2023. Viatris has three different segments of sales: brand medicines, complex generics and biosimilars, and lastly generics. Brand medicines are medicines the company made itself. This includes the research and development of the medicine. That's why they are more expensive. Generic medicines are created when patents of the original drug expires. This allows other companies to copy the ingredients of the original drug. Drug patents are granted for only 20 years. Biosimilars are much harder to create and differ in structure of the generic medicines. Biosimilars are also more protected from competition because of the difficulty in development. For the sales in 2021 compared to 2022, we see a small decrease. This was mainly due to competition in the generic space. Biosimilars had a 14% growth in sales, but the company is on track for $690 million from new product launches in 2021, so this is pretty solid. If they can keep the pipeline strong, they might be able to grow their sales in the next quarters and years to follow. When looking at the financial highlights, you need to be careful comparing 2021 with 2020. The numbers in 2020 were only the ones of Mylan. What I find interesting are the high gross margins. We want to keep an eye on these as we go into the next quarters. The higher the gross margins, the more money Viatris makes for each sale. What makes Viatris so attractive are the free cash flows. Year to date, Viatris has $2.2 billion in free cash flows. The company is worth $18 billion in market cap. This means the company is only trading at around 8 times free cash flows, which is pretty low. With the free cash flow, the company can pay back debt and pay out dividends. So this is very good news. When we take a look at the balance sheet, we can see that Viatris has $750 million in cash and $4 billion in accounts receivable, with total assets of $56 billion. Next to assets, Viatris has $20 billion in long-term debt. This is quite a lot, but since December 2020, they already paid off more than $2 billion. The current portion of long-term debt is $1.9 billion, so they have enough money to pay off current liabilities. Overall, not a super balance sheet, and they will have to pay down more debt. Given the good free cash flows, this should not be a big concern. Most healthcare companies have a lot of debt, so this is not really unusual either. On January 6, Viatris announced a dividend increase of 9%. The company is pleased with their strong underlying business performance and operational momentum. They remain committed to returning capital to shareholders. Obviously, this is very exciting news for investors. Let's now compare the valuations of this spin-off compared to the healthcare sector. Viatris has a PE of 4.36 compared to the sector median of 21. PE of 4 is very low, so we can definitely see there is some mispricing here. But be a little bit careful with the non-GAAP measures, because these do not follow standards and formats in accounting. I guess that there is not yet enough information for the GAAP measures since the recent spin-off. Other measures like price to sales, price to book, price to cash flow also look way undervalued compared to the median sector. I am slowly building a position in Viatris given the fact that healthcare sector always performs decent in an inflationary environment. So far I'm already in the green on this one, but even with the current upwards price movements, I'm still adding additional shares. This was everything for today. Thanks for watching. Subscribe and smash the like button if you enjoyed the video. If you have any questions, leave them down below in the comment section or send me an email. Below the video you can find a link to Book Zero where you can get a free share when you top up your account. Take care and see you in the next video.